Ashmit, thank you so much for those details. Now, PSU Bank stocks have been buzzing in trade for the third straight day amid talks of another round of consolidation. Finance Minister Nirmala Sitharaman has confirmed that work has begun on creating bigger, world-class banks in India. Her comments at the SBI conclave have reignited questions on which banks could be consolidated, whether the system is ready, and what lessons can be drawn from the last mega merger in 2020. Ritu Singh brings you voices from 4 veteran bankers who have lived through and led major bank amalgamations.
India may be headed towards its next major banking shake-up, and this time it's not just speculation. Speaking at the SBI conclave, Finance Minister Nirmala Sitharaman told CNBC TV18 that the government had already begun work on building larger, globally competitive banks, signalling that consolidation and expansion are both firmly on the table.
India needs a lot of big banks, world-class banks. It's not by creating from among those which exist today just by amalgamation. That can also be one of the route.
The last mega consolidation happened in 2020 when 10 public sector banks were folded into 4 anchors. Oriental Bank of Commerce and United Bank of India merged into Punjab National Bank, Syndicate Bank merged with Canara Bank, Andhra Bank and Corporation Bank merged with Union Bank of India, and Allahabad Bank was merged into Indian Bank. Along with earlier mergers like Vijaya and Dena Bank into Bank of Baroda, India went from 27 public sector banks a decade ago to 12 today. Now, speculation has centered on the smallest of these 12. Indian Overseas Bank, UCO Bank, Central Bank of India, Punjab and Sindh Bank and Bank of Maharashtra as possible candidates that may be paired with larger lenders like SBI, PNB and Bank of Baroda.
Previous round of merger, 1920, we can say in some way it had been a success. There were short-term pains in the beginning, but in long-term, profit and efficiency gain has been achieved. Cultural integration continue to remain a key challenge. And if that is the case, the point is whether you are surviving reasonably well or you have been put in a position to exploit your potential to the full extent.
Bankers say the next consolidation must focus on synergy and not just size. The 2020 mergers were driven largely by technological alignment. But today, the need is to pair banks whose strengths complement each other and deliver real growth benefits.
Unless and until there is a synergy which will flow, post-merger, it may not really yield the desired results. The intention should be that if at all merger has to happen, then the subsequent growth should be significantly higher.
But synergy isn't just about numbers. It's also about business strategy, the geography a bank dominates, the segments it serves, and the strengths it brings to the table.
In my opinion, consolidation is just not an arithmetic sum up of the balance sheet. So it was basically on the technology because that gives a convenience of integration. But I think now we have crossed that stage and we can swing to the other levers that can facilitate the value creation in terms of capital size, profitability and the efficiency indicator.
Yet the hardest part of any merger isn't capital, technology or geography, but its people. The integration of Indian Bank and Allahabad Bank in 2020 illustrated this clearly.
Culture was a big challenge. I think people make or mar an organization. Whichever merger, whichever consolidation, unless we take care of people, it's not going to succeed. I think in Indian Bank, we could focus on the right areas, and then it's where it is today. I think it's doing very well.
Veteran bankers caution that India must guard against 3 systemic risks: creating banks that are too big to fail, hollowing out regional credit delivery if all banks become national giants, and expecting global-scale banks to still handle priority sector and microcredit demands. They also warn that mergers must not undermine India's rich regional banking character, especially when technology is changing how customers choose financial services. While many agree that India does need larger banks, banking veterans like PJ Nayak, for instance, have argued that public sector banks should first be brought under the Companies Act so their independent boards can take a call on their merging partners rather than have a government-arranged combination. They point out that the market capitalization of India's largest private sector lender, HDFC Bank alone, for instance, is larger than the market cap of the top 6 public sector banks, which they point out is a reflection of what independent and profit-focused boards can achieve. In Bengaluru, Ritu Singh.
The United Nations Security Council